When a company like Zscaler is down 25% from its recent high just a few months ago, then we've got to take advantage of that and jump in and make some money. And we're going to do that utilizing options. Zscaler is basically a triple threat. It's a security company that operates in the cloud, utilizes AI, and sells software as a solution, SaaS. So definitely a triple threat. In this video, I'm going to show you why now is the right time to sell a put credit spread in Zscaler. And I'm going to show you exactly how to do it on the option trading platform and collect a quick $300. Guys, before we get started, if you appreciate the time and effort that goes into making these videos, be sure and hit like and subscribe down below to get the video out to as many people as possible. Also, be sure and download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks. There's also a paid course as well that's very reasonably priced if you want to dig into the options a little deeper. Disclaimer, I'm not a financial planner and I'm not recommending trades. Please do your own research, and if you're new or learning options, I recommend you start small. Use the link below and open an account with Moomoo. You can get 8.1% on uninvested cash and up to 15 free stocks. You also get the free charting software, which is great and I use every day. It's a zero commission online platform brokerage. Why is now the right time to be long and sell a put credit spread in Zscaler? The cloud security market globally is growing at a compounded annual growth rate of 9%. We know that we're competing with certain non-ally countries globally for resources, freedom, land, oil, everything. Russia and China and others are constantly doing and creating cyber attacks against us. And there's bad people inside our own country as well that are launching cyber attacks and ransomware to get money from companies. So if you are a large company, you pretty much have to have cyber security if you use computers. And who doesn't use computers in business? So inside North America and the US, it is growing even faster at about a 15% CAGR compounded growth rate. Palo Alto Networks and CrowdStrike, both direct competitors of Zscaler, recently reported earnings and they both beat. So that bodes well for Zscaler and their upcoming earnings announcement on Tuesday. Also, since CrowdStrike just suffered the big cyber attack that affected all kinds of businesses and knocked them out for a good period of time, so they'll likely pick up some business that was considering CrowdStrike, or they probably want to switch now and be a little bit safer with Zscaler. So Dan Victor wrote an article, should you buy Zscaler stock before September 3rd? And that's the earnings date. The Zero Trust Cloud cybersecurity innovator gained more than 40% over the past year. They are also down by about 25% from their 52-week high. The company's fiscal fourth quarter earnings report, scheduled for September 3rd, could reaffirm a positive long-term outlook. Should you buy, sell, or hold Zscaler stock before Q4 earnings? For the fourth quarter, Zscaler projects total revenues between $565 and $567 million. Zacks estimate is pegged at $567, which indicates a 24.8% year growth rate. Zscaler anticipates earnings per share of 69 to 70 cents. Factors shaping the upcoming results: the solid adoption of in-cloud security platform, Zero Trust Exchange due to the ongoing digital transformation across enterprises, and the rising uptrend of hybrid work is likely to have been key catalysts. So that's good for the earnings. The growing adoption of software-defined wide area networks, SD-WAN solutions, may have acted as a primary driver in the fiscal fourth quarter. And the Global Market Insights report indicates that the SD-WAN market is expected to reach $69 billion by 2032, up from $7.2 billion in 2023. So that's a huge growth rate and a CAGR of 27%. And there's only a handful of companies that offer SD-WAN solutions. And ZS has been benefiting from the increasing opportunities in this space. They've got a bevy of products as well. They've got internet access and private access, and that's been driving customer retention. They also have new zero trust exchange features, cloud access security broker, and cloud browser isolation and cloud protection. So, should we consider investing in Zscaler? A strong presence across verticals such as banking, insurance, healthcare, public sector, pharmaceuticals and telecommunications services, and education safeguard it from negative impacts of ongoing headwinds. So they're diversified. They're in many different industries and sectors. Its aggressive investment in R&D may weigh on its near-term profitability. So we've got to be careful. They've been really focused on R&D and growth over the last couple of years. It's doubled its expenses in R&D. So they're looking long-term. 30 analysts currently have Zscaler as a buyer strong buy and no strong sells or sells. And 235 is the target price, with it trading at 200 now. The income statement is very strong, with revenues increasing year over year, and the assets as well on the balance sheet are increasing year over year. So what's a good option strategy to use if we want to be long Zscaler prior to the earnings announcement on Tuesday? Well, I'm going to sell a put credit spread, and I'll show you how to do it right here. We punch in ZS in the upper left on the trade page to pull up the option chain. We're going to click on the September 2024 option chain and open it up, since it is just 20 days to expiration and the nearest expiration regular option chain. And I'm using the Tastytrade platform. There's a link down below. The stock price is currently trading at $199, and the IVR, which is the implied volatility rank, is 52, which is really pretty high. This is because the expected move is $21 up or down from its current price, since earnings is a binary event and the stock price can move quite a bit after the announcement. I'll click on the 190 bid to sell the 190 strike put option. Puts are on the right and calls are on the left side. Then I'll click on the ask to buy the 180 put option. This makes the put credit spread $10 wide. We collect $3 for selling this credit spread. Since one option contract controls 100 shares of stock, this is really $300. Switching to the curve mode, we can see that as the stock price increases, we profit. As long as the stock price stays above the 190 short strike price, by the expiration date in 20 days, we keep the entire $300. The break even is the short strike 190 minus the credit collected, or the $3, so the break even is $187. So the stock can move down and we still make money. We hit review and send and place the trade. If ZS misses earnings or guides lower for some reason, then hey, that's okay. We can't win them all. However, if that does happen, I'll likely just take my September put credit spread and roll it to October and collect additional premium. I may even at that point put on another October tranche, a put credit spread, and collect even more premium. I'll just look at it basically as a buying opportunity, or in this case, since we're using options and selling them for a higher probability of profit, a chance to sell and collect additional premium. All right, guys, I put a link down below for the free options workshop. Be sure and grab that. Remember to hit like and subscribe. Join Moomoo. Get your 15 free stocks. Leave a comment. Ask a question. I answer everyone. Let me know what you're trading, what you're having success with. Thanks for watching. I'll see you in the next video.